Hi everybody, I wanted to jump on here this morning and just give you a little update with what's happened in the last trading session in the United States after Jerome Powell, the US Fed chairman, has spoken in Jackson Hole, because you've woken up this morning, those of you down under, and the S&P is down 3.3% and the NASDAQ is down 3.9%. The Dow Jones had one of its largest one-day falls, down around 1,000 points. So I wanted to just give you some thoughts on it. Also, what has been said that has caused the market to sell off like it has. Is the sell-off going to continue? You know, what's really going on? So essentially what we've had is a US Federal Reserve that is now, this is not just my view, this is the view of other professionals in the industry as well, that are a lot smarter than I am. They have no question made policy mistakes. What the US Fed did in 2020 and 2021 with respect to keeping interest rates at zero and stimulating the economy to help the economy through the pandemic period was the right thing to do. But the problem that they created was, and where they made the policy mistake, is they continued on with stimulus, keeping interest rates at zero, buying mortgage-backed securities and buying assets that essentially they needed to purchase to stimulate the economy initially. They continued that far too long. For example, interest rates were still zero in March this year, and they were still buying billions of dollars worth of mortgage-backed securities and bonds in the United States. And just simply this time last year was when it was obvious to everybody else but the Fed that they did not need to continue with the stimulus package that they had, and inflation was highly likely going to get out of control and continue to go higher and cause the economy some stress. Now, yes, consumers are wealthier than ever before with respect to the amount of cash they've got, because during the pandemic they were helped along with that stimulus. And obviously they couldn't really travel anywhere, couldn't do anything. So, consumers have had plenty of money. That's not an issue. The Fed didn't recognize the fact that they had the accelerator foot to the pedal, foot to the floor, I should say, and they needed to take that off. Now, what they've done is they've continued that stimulus too long. Inflation has got out of control, got up to 9.1%. Inflation in Europe is much, much higher than that. And arguably, let's not talk about Europe today. Let's focus on the US, because that's what's going to impact many of your portfolios, particularly those of you in Australia as well, because it's what happens in the US. If they catch a cold, Australia's going to catch a cold. There's no question about that. So we'll get to that with regarding recession fears in a moment. But bottom line is, the Fed started to raise interest rates a few quarters back, started to raise interest rates 0.25%, then 0.75%, then 0.75% again. And Jerome Powell, he's been a terrible communicator with respect to what he's been saying about future policy decisions and what the Fed's going to do. Just going back a few weeks ago, he said to the market that inflation may have peaked. It may be coming down now. I'm just sort of encapsulating what he said. This is not specifically word for word. We may need to moderate the pace by which we're raising interest rates. So he basically said, well, inflation is potentially coming down. We may be able to slow the aggressive interest rate increases. So obviously the market gets soothed by that. Consumers are, put at ease by that they're not going to continue to aggressively raise interest rates. Inflation actually does start to come down. And wind forward to Jackson Hole Symposium, where he's actually meeting with other central bankers. And he's now come out with a comment today where we are going to be far more aggressive. There is going to be pain. It's going to be a cycle of tightening policy, raising interest rates, getting interest rates well above the desired target level, which is around about 2.5%. They're going to continue to raise interest rates to 4%. To really fight inflation, maybe even higher than 4%. And we're going to be aggressive, and we're going to continue to do this until inflation comes down. What he should have said months ago is this. What he's saying now is the right thing, but what he's actually doing, he's basically reeling people in, reeling the market in, reeling consumers in, and then he's whacking them after the fact, and he's now spooking the market and he's spooking consumers. Now, the high probability is now the US is going to have a recession in 2023. Josh Brown is 100% on the money when he says there has never been a period in history where inflation has gone above 5% and the Fed has had to raise interest rates, and by doing so, we have not seen a recession. The probability is the US is going to see a recession. Australia is highly likely also better than 50-50 going to see a recession as well, because inflation is too high and it needs to be fought with high interest rates. Now, longer term, you may be thinking, well, this is a negative. AB's talking about a negative here with regarding potentially what's going to happen to share prices. I'll get to that in a second. The bottom line is, longer term, this is the right thing for the Fed to be doing. This is the right action to be taking, raising interest rates to fight inflation. But it's taken them too long to do it. They kept the stimulus package going for too long. And let's get off that, because there's no point talking about what they've done in the past. We need to talk about what they're potentially going to do in the future and how we can control our temperament as investors. Bottom line is this: Powell has now officially spooked the market and officially said we made a policy mistake. He didn't say that, but that's basically what he's saying by the change in tone and the aggressive tone in Jackson Hole, which has now spooked the market. The Dow Jones down 1,000 points. The only thing in the very short term is going to save anybody with respect to anyone thinking the market's going to go higher in the next few weeks, which is relevant for us that are long-term investors, is this inflation data that's going to come out on September the 13th. Because what he's now saying to US consumers, just forget about the market for a minute, he's saying, hey, you guys that have had free money for the last 10 years, those of you that have enjoyed low interest rates at 0% for the last 10 years essentially, those of you that have basically had, a great time of it with regarding mortgage rates being so low, get ready for some pain. And there will be some pain. There will be some consumers and some people here in Australia that will experience genuine pain, and sadly, there'll be a lot of bumps in the road. The Fed is absolute resolute now in fighting inflation, but the problem is their communication has just been horrible to the market. The communication to the average consumer has been horrible. And what they are doing now is the right thing long term. So now let me get to the positive. Longer term, this is the right thing for the Fed to be doing. It has to raise interest rates. The RBA has to raise rates. The Bank of England has to raise rates. And anyone who is an investor that has a 3 to 5 year time horizon, you're going to be just fine. You're going to be no problems whatsoever, provided you invest in great quality dollar producing assets and you're prepared to continue to invest, and you sit on your tail and you're not worried about speculating whether the prices are going up or down in the short term. You're going to be just fine. But when we have back-to-back years of the S&P 500 up 23% in 2020, 28% in 2022, it is delusional to think the market is going to be up 10, 15, 20% in 2022. It's not going to happen. And the stimulus package that the US Fed has had going is going to impact the market, is going to force inflation up. We knew that. We knew inflation was going to go higher. We knew the Fed was going to tighten, but they just simply kept it going too long. And now they've had to turn around and say, oh, we're going to have to get really aggressive now. And, it just blows my mind that an institution that has so many smart individuals can make so many communication errors and policy mistakes with its directive to the market on what it's going to do. But I don't want you to be concerned about this longer term, because what it will create potentially in the next 2 or 3 months is an opportunity for many investors to buy great quality dollar producing assets at wonderful prices if the market was to continue to go lower. Statistically, between October, November this year and June 30 next year, historically speaking, with the midterm elections and some other data that I'll share with you another time, the market has a greater probability of being higher rather than lower, because even though there is a high likelihood we will see a recession in the US and in Australia, that doesn't mean the market is going to go down on that recession. The market has already contracted this year. The market has already priced in a recession this year. What the market will do now is price in a recovery potentially longer term. And those of you that are genuine investors that are willing to sit on your backsides and own great dollar producing assets, as I said earlier, you're going to be just fine. But right now, the Fed has come out, spooked the market, spooked consumers. We're seeing that reaction in the market and the prices in the last, trading session. That's where we are right now, guys. If you have any questions for me, let me know in the chat. I'll give you a further update maybe tomorrow, but there is some genuine pain coming with high interest rates. That doesn't mean that anyone should stop investing. What they should be doing is looking to buy great dollar producing assets when they're cheap. And they are cheap right now, and they'll be a lot higher in the years to come ahead. The value of those businesses will be higher, and those of us that have been buying throughout 2022 will benefit. So that's where we are. High probability of high interest rates, much, much higher interest rates. Anyone thinking that the rates are going to even stop going higher in Australia is delusional. They are going much, much higher. There is going to be pain ahead, but this is creating opportunity for those of us that are longer term value investors. Have a great weekend, guys. Bye for now.